following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the day like we usually do, taking a look at the German DAX. Oh, by the way, our guest at the half hour will be Dr. David Paul out of the UK. And he's always got some great information. Of course, you remember him as one of the people that mentored Tom Hugard. Tommy, terrific. Okay, let's take a quick look here at the next one, which is really interesting. This is the S&P cash. You notice that we have a double ABCD pattern up there that we talked about several times over the past several weeks, and you'll notice that we're starting to move down into that area. The low that we made last Wednesday was a 38% retracement. So until we go below that 3330 level, it looks like we could. I posted two charts already. I don't know why they didn't come up. Double check that, please. But I'm showing two charts posting in the in the room. So I hope that's right. Let's I don't know what else to do. I've already posted them both. Let me post it again. Hold on. I'll do another one. Just a second. Okay, good. They're up and running. All right, good. All right, I want to talk just a little bit about a couple things. First of all, there's a article out there called the Minsky Moment. It's a man named Hyman Minsky. He's a chartist, I guess. And he is saying that we're close to a Minsky moment where the markets are going to collapse. Boys and girls, let me tell you, stick with your own minute, okay? Your own moment. You really have to, because if you wait for a crash, folks, you're really wasting a lot of time. I've been doing this business a long time, and I've been fortunate to capture some major moves. The top in 2000, we were there. The top in 2008, we were there. We were right at the bottom here this year. We were right near the top in January. We had all those patterns there, but it doesn't make any difference. Honest to gosh, it doesn't. When I used to be on TV on the old CNBC and KWHY, Financial News Network, I was on several times. Once with Arch Crawford back in 1987, and again in the bottom. Or the top in 2000 was also one that was really important. And then remember the big bottom in 2009. But frankly, it doesn't make any difference. I have nothing against this guy, Hyman Minsky. I have no idea who he is. I've never heard from him. But, that doesn't make any difference. What you have to do is you have to decide how much you're going to risk to see if you're going to win. The key to this whole thing here is the best loser wins. If you keep your losses small and can find a methodology, whatever it happens to be. And there's millions of them out there. Just find the one that you like and go with it, because it doesn't make any difference. I don't read these things. People send me, take a look at this, take a look at that. But it might be the greatest thing in the world. But how many times have we heard, stuff like that? Let me show you how ridiculous some of this stuff is. This is one that came in, and it rhymes with what we're looking at today. Now, I don't know anything about this, but look at this chart here, folks. This is a chart between lumber and the NASDAQ. Now, if you win a prize, if you can tell me the relationship between lumber and the tech stocks. Hello? Those charts just happen to look alike. But folks, all charts look alike. If you just take the X and Y axis off, you can't tell what it is. I was at a seminar with John Murphy, probably 15 years ago, down in Dallas, and there was somebody in the audience was really heckling him. And of course, John is, he's one of the most sought after people in our business, and he was very calm about it and everything. But he basically showed the guy that, look, you can't tell which pattern it is once you take the X and Y axis off, and that's true. So that what we have to do is to find a spot that looks relatively interesting. That's it. So, we've been watching that 618 and we're at crude oil for well over a month, and it gets up to 43.75, the exact number. and now it's trading $6 lower, and people can't understand why. Well, it's probably going to 30 bucks a barrel based on what we see in the crude oil. But that's just one thing or another. The Minsky moment, you have to just Google the Minsky moment, folks. I don't know anything about it. Now, there's another chart that looks interesting here. It's from one of our listeners that works with smaller time price charts. These are basically I don't know if this is on. I don't know if this is listed or not. It's only trading for $1.16. But if we take a look at this, it's called IBEX Daily, and if you look at it, has some very good Fibonacci numbers. You can see that red line there that defined the the 1.55, 1.44, and then the pull off. We're right at major support here to $1.16. If we get below this, you're most probably going to head down to this level a lot lower. It used to be that any stock that was trading below $5 had a very high probability of going bankrupt, but I don't know if those figures are still good to this day or not. But if we want to look at something else that you've got to remember when you're trading these micro stocks, you don't get stuck with really big commissions. And if you look at this on a little longer daily basis, you're going to be able to see here, hold on here 1 second, that we have these lower tops, ever since 2014, and this last rally went right up to a 50% retracement of the high that it made back in 2017, and it was a perfect 61% retracement from the high in 2018. So all I can say about this is that at $1.16, it is at major support. Anything below, I'd say 70 cents, I would say I would be really careful. The other thing when you're trading, these stocks that are very cheap, you got to make sure that your commissions, are very, very low. That's one of the main things that you have to do as you're looking at some of these things. Okay, another one sent by someone who follows the Elliott Wave. The Elliott Wave people have made a little bit of a projection. I don't know if it means anything or not, but here again, they're showing that if the market is above a certain level in election day, Trump has a strong probability of winning, and if it's below this level, Biden has a strong probability. So that's the main thing that I'm looking at. My personal opinion is it doesn't make any difference who gets elected. It's not going to turn out the way we think it's going to turn out. That's my prediction, and I don't know if it means anything or not, but we'll have to do one thing at a time to see if things are going on that way. Okay, now here's another one. We looked at that one with the lumber. Now take a look at the other one that somebody. This is another one from the Elliott Wave, and I'm not bashing Elliott Wave. I'm just showing some of the things that they're giving ideas for. That's all. Here's one between the Dow Jones Industrial Average and the National Basketball Association attendance. Well, guess what? Attendance has happened this year. It's fell off a rock because there's nobody there. So whether these things mean anything or not, I don't know. But, what I try to do, folks, is to find a spot where I say, well, I don't know what's going to happen next, but by golly, I don't have to risk very much to see if I'm right or not. And that's the whole thing that trading is all about. You have to take the responsibility yourself, and that's basically it. The good part of looking in the den here is you got some really smart people giving you a lot of great ideas, and you have to pick the ones that look the best. We'll take a break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we've had a request to take a look at Bitcoin. And as you can see here, we had that head and shoulders pattern that formed between August and September. Absolutely perfect one, folks. The right shoulder is lower than the left shoulder, and the head to the shoulder and the shoulder to the head is perfectly equal, as defined in the book, The Non-Random Walk Down Wall Street by Dr. Andrew Lowe. And what we've done now is we've come down and made a 61% retracement of the July low. Now, this is very important, and we've been here now for 4 days. So that's telling you that some support may be coming in, but anything below 10,000, below 10,000 actually, we're 10,145. So any tick below 10,000 would tell you that this support has failed and we could be moving down. But right now it's at a perfect level to look at. What I would like to do, if you were, well, I'm not happen to be in this, but the one thing that you really want to watch is to watch the 382 from the middle of March low, that was the 23rd, all the way up to the high that we made on August the 14th. If you look for a 382 retracement on that comes in around 9,000, just a little above that, that's the one that would really be interesting, because this is not a market that has gone into what do they call those things, a bubble or anything like that. This had nothing to do with a bubble with Bitcoin, because you can't get something that goes from, let's say, $100 up to 20,000 and then it drops down to 3,000. I mean, if it was a bubble, it would go to zero. And this market's come back and has been as high as 14,000. So it's, came halfway back right away. So that's telling you that it's not a bubble. So you pay, close attention to it. I believe we're going to hear more and more and more about Bitcoin, and also a fact that, these things are related to, to this situation where they called it, oh dear, now I slipped my tongue here for a second. I'll remember it just a minute and I'll post it. But anyway, it's not about the cryptocurrency stuff. It's about the other part of this, which is, I can't remember the word. Is it? Oh, darn it! I've lost my thought. I don't want to worry about it because I don't really not have too big an interest in it. Blockchain. Thank you, Dollar Bill. I appreciate it very much. I knew it was in there somewhere. Okay. Now, one other thing that is very important that we talked about just a minute ago, and that is the chart of what's going on in some of these FANG stocks that have been started to get hit. And you'll notice that many of these are way up in the air. Now, here's one that we talked about just the other day. Remember, I think it was called Friday. Let's get up here and take a look at it. Here is the stock of Apple, and we got up to the 120 level, and now we've already started to back off from there. That's a very important number, folks, because if we can't get above 123 in Apple, that's going to be a very, very bearish formation, because the ABC on this takes it down to about I believe it's about 120 or 108, I believe, something like that. I mean, it's really, it's not bearish. I mean, it's having a big correction. So pay a close attention. And the other one, of course, is Amazon. It had this huge run up here, and it's also ready to go. None of these things make any difference, folks, on any of these markets because of what happened on Wednesday and Thursday of last week. Wednesday and Thursday of last week, the S&P made a 38% retracement on the downside, and so did the NASDAQ. So these numbers are incredibly important, and you have to pay attention to them, because if they break, then they're looking at something is really, really negative. We got to get below 3330, I believe, in the S&P, and we got to get below 11,000. We've got to get below way below 11,000 in the NASDAQ, because that's one of the things that you'll be, watching closely. The other one that is interesting is the euro. The euro is beginning to get down to areas where we could be looking at some support. If you remember, we were extremely bearish. The euro, hold on a second, I got to put the chart in so that you'll be able to see it. And then we'll go up here. We were extremely bearish, the euro, when it was at the 120 level, a little right at the 120, and here we are at 117.92. And if you look at this really closely here in the euro, folks, you'll notice that down here, when we make the lower low from the 27th of August, we're going to be hitting a 3 drive to a bottom pattern around 117.60. That's about 30 pips from where we are right now. And I would be highly suggestive of taking the profits in there at that 117.65, somewhere in that ballpark. It's about just roughly 27 pips from where we are right now, and take it, and then take the money to the bank, and then wait for another ABCD pattern or a 382 retracement to reinstate the short. And the reason why I'm doing this is you really, when you have a nice win, you have to book it, especially. This thing might go to 111. I don't know, and it'll give you lots of chances between now and 111. But you've got to book some profits in here on some of these things. Because remember, we're looking at stocks that or things that we're watching here are anywhere from 15-minute to hourly to 4-hour to daily, and the profit objectives on these would be difficult. The main thing we do is when we put the trade on is to see if all the patterns are lined up the way they think they are. That's correct. All right. Now remember, the old rule is the best loser wins, and so what you've got to do is you've got to protect yourself against that. So you might have to try it several times in order to be right, and that's the whole key. So you've got to book some profits too, because nothing is more. And you got to stick with the patterns, folks, because you're looking at something here over an 8-day level that's right at making major support down in here. So that's my strategy, and I'm sticking to it, as they say in the trade. We'll have Dr. David Paul on here. Always have some really good, interesting things, to look at. And by the way, Tom Hugard is going to have a new book coming out very, very shortly. The book's all been signed. It's ready to go. And it's going to be really interesting to see him how it works, because he's incredibly talented at what he does. And boy, if you talk about how he watches the losses, boy, there's a real thing. And he's only right about 25-30% of the time. Yet when he's right, really big. So that's a big thing to remember as we're looking. Okay, we got one other one here that I wanted to talk to you about that I think is really important, and that is the crude oil, because we've had some really big moves to the downside now. As you see here, we're looking at a potential. Oh, just a second. That didn't work out the way I wanted it to. Here we go. 1 second here. Why I can't stop? Hey, there's nothing wrong. Hey, whoa. Let me answer your question. Is DITM is saying, why can't I stop being bullish? You shouldn't stop being bullish if you're bullish. It doesn't make any difference. There's no bull side and there's no bear side. There's only the right side, and that's what you've got to focus on. So that's all I'm doing is, and you can be as bullish as heck on any of these things. So please don't take just because somebody tells you something, that doesn't mean anything. You've got to decide what you want to do. But if you want to be bullish, DITM, go ahead and be bullish, but just protect yourself on the downside, because someday, and I don't know if it'll be in my lifetime or not, this market is probably going to turn down. Whether it's this year, next year, whatever, there will be a big correction of 60 or 80%, just like it's done in all other times. Hey, we'll be back with Dr. David Paul, folks, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and I believe we have Dr. David Paul from the UK online today. David, how are you?
Yes, Larry, how are you doing, man?
Very good. I understand that Tom is coming out with a new book pretty soon.
Yes, I believe so.
Hey,
so.
That's
Chatting
Well,
to him last night, yeah.
Well, that's great. Go ahead, my friend. Tell us what you're looking at today.
Okay, well, we'll start with the overall market, which I believe has been marked down from Friday's close. Can you see the chart there, Larry? Okay?
Yes, everything's perfect. You've got them lined up just the way we'd hoped you'd have, so we're in great shape.
Good man. that, folks, is the VectorVest Composite of the USA, which is an equally weighted index of 8,000 plus shares that we follow on the American market. I think it's the broadest measure of the American market that I know of. There could be broader, but I can't think of it.
It is. It is hands down the best.
So those little red and green triangles, Larry, that you can see are a medium-term market timing system. It's known as the DEW. I won't bother you with what the acronym stands for, but that was the sell signal in February, and then we got a buy signal on the 6th of April, and that buy signal is still in place. Now, this is an incredibly long period of time for the DEW to be in the market, and on Friday, in fact, about an hour before the close, it in fact was going to print a sell signal, but that ramp up in the last hour on Friday negated that sell signal. As you can see, the blue line study down below is the proprietary breadth measurement, the buy-sell ratio, and every day we put a buy or a sell to every share in that 8,000. And as you can see, as you well know, there are many other measures of breadth that have said pretty much the same thing, that the market is going up in very, very little participation. And in fact, on Friday, the number of shares on a sell recommendation were higher than the number of shares on a buy recommendation. So that divergence is the longest divergence between price and breadth that I've encountered. And I put on my first trade in October 1982. I know you've been at it for longer than that, but nevertheless, it's a very strong divergence between price and breadth. Invariably, when you get a signal like that, Larry, and that's preceded by that length of a divergence, then that signal, in fact, has a great deal of legs to it. So I wouldn't be at all surprised to see that we get a fairly strong sell-off from here. But as I always say to keep people awake in my classes, I'm feeling bearish, and that normally means, Larry, that there's a bottom quite close when I'm feeling bearish. So I wouldn't be at all surprised to see a little bit of downside and then a rally maybe up into tomorrow lunchtime of that order. So that's a bearish situation. But the last time I was on here, I talked about my proprietary swing trading methodology, which combines shares with an outstanding growth rate with a long-term measure of the trend, which at VectorVest we call the comfort index. And I did that standard search on the 6th of April to Friday night, and the market's up 30%. The VectorVest Composite, that is, was up 30%, but that the top 10 shares from that search are up 111% in that time. I've traded in most of those. I've traded in and out of them, Larry. I didn't hold them the whole way. I think I would have made more profit if I'd had the testicular fortitude just to sort of hang in the whole journey. But I traded in and out of them, and it's a very, very good period for me and for VectorVest subscribers. The UK people can trade in American shares relatively easily, either through opening up an American account or opening up what we call across here a spread betting account, where all the American shares are in fact traded actively. So that's been a particularly good period. And anybody that takes a VectorVest trial can replicate that very easily indeed. I think you've probably seen this massive outside day that we had, outside week, should I say, on the SPX on Friday, and it's been there before. It was there in June. We got a similar outside week, and that didn't follow through. But this outside week, in fact, has got bearish divergence on that 8-week stochastic, and that 8-week stochastic has stood me in very good stead for many years. So the whole thing looks very bearish to me, but I would not rule out one last hooray into the American election, sir, but I'll leave the politics to somebody else. Now, the founder of VectorVest, a guy called Dr. Bartolito, is primarily a fundamental analyst, and he's put together a model of the S&P 500 companies And the model is out there in the public domain. It's a model that he's been working on for 30 plus years. And it looks at the earnings of the S&P 500 companies, it looks at interest rates, it looks at inflation. And for the last few months, Dr. Toledo has been telling us that we're in a bear market scenario at present. So his fundamental model supports the view that this rally that we're seeing is in fact a bear market rally. So any sell signal from the technical position would be in fact substantiated by the fundamental position at the moment. So as I say, we could easily get another run up. People are using this word melt up. I'm sure you've heard it a dozen times over the last month or two into your elections. But nevertheless, the situation looking quite weak to me, both technically and fundamentally. And Dr. Toledo has a 30-year record, in fact, predicting bull and bear markets using his fundamental model. Shouldn't be used alone. It should be used in conjunction with effective S-market timing signals. But when both are firing together, it gives some very high probability moves. So, but there are still opportunities, and I tend to be too positive. I'm happier on the long side of the market. It suits my personality, Larry. But if we do get the last hurrah, and it's far too early to buy anything, I really like the look of this little company called Apps. Have you heard of it? It's a software business. It's growing earnings really strongly. We project earnings to, in fact, rise by 50% next year. And it's pulled back. It's pulled back in one of my very favorite patterns, a Wyckoff spring. Far too early to do anything, Larry. We would need to see if we're going to get this hurrah in the market up into the American elections. I think that's quite probable. And if that's the case, and we see print a couple of nice green days here on good volume, then this thing can easily flow. I like the way it moved up here on good volume, and as you can see before the gap, somebody got a sniff of it because it was starting to rise in big volume for 4 or 5 days before the news came out. So that is a very solid story for anybody to look at.
David, we have to pay a few bills. Could you stay with us, please?
I'm here, sir. I'm here.
Thank you very much, folks. Dr. David Paul from the UK. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Dr. David Paul out of the UK. David, please continue. It's really great information. I'm enjoying it very much, so please continue.
Well, that's very kind of you, Larry. The Wyckoff spring is very similar to the Gartley pattern that you taught me so many years ago. And I think that it was you who told me that Wyckoff and Gartley communicated.
Yes, they were good friends.
Yeah.
They sure were.
I'm very fond of Wyckoff's work, I must admit. It was one of the first courses that I bought way back in the 1980s. It cost a heap. I was living in South Africa at the time. It cost a heap in South African rands, and it was really it was the same course that he wrote way back in the 1930s, and he wrote in a funny way, like the sort of King James's version of the Bible, all these and thys. But when you got through all of that, some wonderful stuff in there that hasn't been surpassed since he wrote it. So that's his spring, where the market, in fact, comes back. It runs, it then comes back on falling volume, it rises, can't make a new high, and then comes back and takes out the low. He wasn't big on fib, so he just looked at levels. That pattern has been the mainstay of my trading for such a long time. In fact, for such a long time, I said I wouldn't actually speak about it to anybody else because I was scared that it would get out there. But I'm too old to worry about that anymore. When that market, if we get a nice green day there on rising volume, and the front page of VictorVest tells us that the general market is showing some green. And it's not at the moment. The facts are that the market is moving down at the moment. But my stomach tells me we'll get a last hurrah up into the Euro election. That's what my stomach tells me. My stomach is frequently wrong. So I won't be doing anything onto the facts substantiated, but nevertheless, that's what my intuition tells me, that we'll see a strong run up into your election. So that's the first share that I think people can do well to have a look at. The second one is a share that I really, really like. It's called the Workhouse Group, and they're based in Ohio. And they make electric vehicles, the sort of electrical vehicle that you would see your Amazon parcels being delivered in, Larry. They in fact are world leaders in those small, medium-sized trucks. So people, do your own research on that. They've got a great deal of battery technology there as well. But as you can see, this share sort of moved up on huge volume, folks. That's good. Mr. Wyckoff said that markets rising and rising volume is good, and markets pulling back on falling volume is also good. And as you can see in this pennant here, it came back and it tried to break up at the start of August, and there was a bit of volume went into it. And over the last few days, it's trying to break up in rising volume. It had a really, really good day on Friday. Again, a bit of volume coming in. So I think that if we do see the market rising, then that has got a great deal of potential and has got the ability, if we were to get some form of confirmation from the market itself, that a break up through here with a stop loss down there would probably, and this darn thing, if you follow classical TA, this flagpole should be repeated, and that would take us a long way up the page. So that would be a trade with probably a 3-to-1 risk to reward ratio, and if you add into the darn thing as it goes your way, you can probably make it a 5-to-1 trade. And so that's something that I think that everybody should have a look at. So those are two opportunities should we get this last hurrah into the election. I've got another share, and I'm sure this is a chart, Larry, that you've been looking at yourself, and I think that's the bullion market, and it's sitting on support. Since I did this morning, it's actually come down a little bit. That trend line has got quite a few touches there, and I think you can see this little triangle. Now, is it going to come down and make a C wave down to here? That was $210, and it can quite easily do the same down to here. So this is an incredibly important level, guys. And I've instructed the VectorVest people, those people that haven't got a gold position, that in fact cashed in, that you need to sit and wait and see whether this level is going to hold or not. But we could quite easily get down to 1830, 1840. I can't quite remember what the numbers were. This is 62% retracement, somewhere down around here. I can't quite remember the number from these lows.
I want to give you an A+ on that. Exactly right.
Well, you taught me it, Larry, because so
I gave you a few ideas.
you taught me well, sir. You taught me well. So my stomach tells me that this level won't hold. I could be wrong. That it needs to come back to here, and invariably before a big move starts, it'll come down and run obvious stop losses. So I'm hoping this level can hold. And ladies and gentlemen listening, if it does hold, or we get a leg down to try and get rid of an awful lot of people, and that's what happened here. See, it took out all these stops down here. Markets don't like people getting rich, Larry, that shouldn't be getting rich. Okay, they tend to flush those dudes out. That's a share that I know very well. It's a South African share. It's run by a guy called Froneman, who I know really well, and he's built a mining empire. It's listed on the New York Stock Exchange, and he bought. It's a collection of South African gold mines. He bought the Stillwater platinum mine in the U.S. That's why it's called Sibanye-Stillwater. And he bought up a great deal of South African platinum mines quite recently for next to nothing, right at the bottom of the cycle. And I mean down around here for next to nothing. So he's built up a huge mining enterprise. Now, the bullion price went back by $210, and this thing hasn't moved in the same time. Old Mr. Gann used to teach me that markets break on the fourth attempt, and this would be the fourth attempt to get through that level. Whatever happens, folks, if the gold price holds, that share will double, okay, and moves up. We could see another push back to this low. I don't see much more than that. So just watch the bullion markets. This is clearly influenced by the platinum market as well, and some silver in there as well. And the platinum market at the moment looks exceptionally strong. And if hydrogen is going to be the fuel of the future, which there was a huge article in the UK-based Investors Chronicle about hydrogen, then good quality hydrogen comes from platinum, and that would be good for the platinum price. The platinum price on its knees after a huge bear market. I remain exceptionally bullish on commodities.
Thank you for being with us, my friend, and we'll have you on again. And it really was great talking to you, and especially bringing Wyckoff stuff up, because Richard Wyckoff was truly one of the great masters. So thanks for joining us, my friend.
Larry, it's a great pleasure. Thank you. Bye now.
Thank you.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we were fortunate to have David on. He's really a nice guy, and he's incredibly funny. Plus, he knows his business, which is really good, too. But I wanted to mention a little bit about not about the Minsky thing, but more about Richard Wyckoff. Because when I first got the Gartley book, there was all kinds of footnotes of all these different people in there. You know, there was Schaubacher, who was the son-in-law, who was father-in-law of Edwards and McGee. There was, Wyckoff. I mean, there were Gann. There were so many of these guys. And what 20-Minute and I did is we went and looked and read those books, got those books, and found out what we thought was the best stuff out of those books. And that's the key to, what we do with pattern recognition here. So that's important. Now, pay attention to one number, folks. And that is today, the low on the NASDAQ so far has been 1117, 11,117, folks. That's down one standard deviation. That's where the put players and the call players make their moves. So anything below 111.17 is really, really bearish. And as long as that holds, this market has a chance to rally. And the primary reason for that is the low last week in the S&P was right at a 382 retracement. Now we've taken the low out in the NASDAQ. The last low was 1112.81, so we went down below that. But look at it; it's 50 points higher right now. So that's the key to watching some of this stuff, because these standard deviations from the mean really mean something, folks. I spend a lot of time in the book, the new book, the Floor Trader's Handbook, and it's really got a lot of great stuff in there. And it's about this stuff about Mandelbrot, because the ABCD pattern is nothing more than a fractal of Mandelbrot. And what he talked about, and that's why it works. It doesn't work all the time, but once you understand it, it gives you a really good idea of what's looking at it. Now, remember, we came within about 6 pips of the low in the euro for that 3 drive pattern. So that's another one that needs to be watched very, very closely today, because you want to book something. We'll see you all on the flip side tomorrow, folks.